Hey guys, welcome to Luminary Capital. Coach D here. Today I'm going to be teaching you guys how to do support and resistance. I'm going to be dropping a lot of gem in this video, so stay tuned. So number one, I want to tell you guys this. You see, when it comes to support and resistance, you got to first understand as a beginner trader how the market actually moves. The market moves in three major patterns. Number one, it's known as uptrends, where the market moves in an uptrending motion like that. Number two, we have what's called consolidations, where the market moves up and down, but it's moving sideways. It's not moving in an uptrending motion like that, nor in what's called a downtrend motion. So we have three major patterns in how the market actually moves. We have what's called uptrends, consolidation, and then we have downtrends. So today I'm going to be majoring on what we call consolidation, when the market is failing to break above a particular price or break below a particular price point. That's what we call consolidation in the markets, right? So that's where support and resistance come in. Now, what is support and what is resistance? Resistance is like a ceiling that pushes the price down, and it resists the market from breaking above that particular price point. And also, a lot of beginner traders, such as myself when I started 6 years ago, I always wanted to find a fine line, a straight fine line to say this is a resistance. See, it's not called resistant line. It's called a resistance zone. So it's a general area, just like this box tool here that I drew out. It's a general area. It's a zone where the market price gets to that particular zone, and resistance zones pushes market price down. Down at the bottom here, this zone, it's called a support zone, where once the market price gets to this general area, once it gets into this zone, it pushes the market back up. Now, how do you mark out these key zones, right? First, let me remove this right here and put it here. You see, the market came up from this low and it came up to this high, which is called what? A uptrend. So we have a low, we have a higher high, higher low, and then we have a higher high up here. But something happened, and every candle that you see, it's giving you information and data. It's a language, and it's actually telling you something. I'm going to teach you how to understand the language of support and resistance. See, market dropped right here. It came back up to this general area, and it dropped again. So that's two drops. Once it got to this general area, the market price dropped. Once it got back to this price point again, the market price dropped back below again. So what you do when you see a general area where the market price is struggling to break through, or a general area just like below right here, where the market price is struggling to break below a particular zone, you mark it out. You mark it out where you get as much accurate as possible, and you mark out that zone. The bottom zones will always be known as support zones, and the top zones will always be known as resistant zones, right? So that's why I drew this out here. Now, this is one of the biggest gems here for beginner traders that's learning how to do support and resistance. Never start out marking out your support zones and your resistance zones using a regular candlestick. You want to go over to your candle chart, your candle bars, and you want to select the Heikin-Ashi candlesticks. That will make it more simpler for you to understand when it's uptrending and when it's downtrending. And as you can see right here, right? Remember I told you guys we have three major patterns within the market. We have what's called uptrends, we have what's called downtrends, and we have what's called consolidation. Uptrends is when the market moves in the upward motion. Downtrend is when the market moves in the downward motion. And consolidation is when the market is not moving in an uptrend nor a downtrend. It's moving what? Sideways. So that's what we're seeing here, and that's what you're gonna use to mark out your support and resistance with the consolidation patterns. So I'm going to play the market and we're going to see what happens to this price point if this resistance zone is going to be strong enough to push it back down to the support zone. And I'm just going to play it a bit so you guys can get an understanding of what I'm saying. So market price dropped, market price went back up. So as you can see, what happened once the market price came back to this level, the resistance pushed it back down to the support level. Now, this is what you're going to be looking for as a beginner trader. You want to see the market break beneath the support zone or break above the resistance zone and closes. The candle has to break out and close. For an example, right? This candle came up, came back down. What you're seeing that broke outside of this zone, it's called a wick. So that's the candle wicks that's above the zone. You want to see the full body of the candle breaking outside of the zone. So most times what will happen, the market will come back and retest the zone once it breaks out above the resistance level or below the support level. So the market will do this as an example. If the market comes and a candle closes where the full body closes outside of it, the market will drop a little bit. It will come back up. It's going to retest that support zone. And then it's going to drop to the direction that the market broke out, this is what's called breakout trading. And you catch breakouts by understanding support and resistance as beginners. Now, it's the same for the top side when it comes to your resistance zone. If the market breaks out with the candle that closed, you're looking for a retest before the market pushes back up. Sometimes what you'll see, the market will just break out and keep pushing, which is why you gotta understand how the market moves so you can catch those plays in the market, right? So right now, based off what I'm seeing, the market dropped below this. The market dropped to this price point. So I can say that, okay, if the market breaks beneath my support zone and closes with a full body candle, I'm going to take a sell position to catch the sells on the downside. And now this support zone will now be mitigated. It's now a mitigated zone, because the candle broke beneath it and pushed all the way down, so it's no longer a support zone. Let's play the market and see what happens. So I'm looking for the market to break beneath this zone, closes with a candle, and then enter for a sell position. And then that's how you would catch a breakout zone. And I'm going to set up just a short here so you guys can see the profits that you would be able to make off understanding support and resistance. And then I'll put stop just above the support zone if the market actually breaks beneath it. Let's see what happens here. So let me pause real quick. So right here, is that a valid trade with support and resistance? No. Why? It's only the wick that broke through. The candle didn't break through and close, which is why you want to see the candle break through and close on that move. And the reason why you see the market is being pushed up like this slowly, it's because the support zone is so strong. You see how the market reacted to it? But if it breaks beneath it, we're going to take a sell if the candle closes beneath that support zone. And this is how you take breakout trades for support and resistance as a beginner. And these are major gems here, major gems. As you can see, the candle came down and it closed, and then the market actually pushed all the way down. And that's how you would take a breakout trade when it comes to this market. And boom, you would have hit your take profit right there. And that's 41.5 pips that you would caught in that one single move. So this is how you do your support and your resistance. And remember, as a beginner, you want to use the Heikonaushi candles so you can see your zones even more clearer, and look for areas in the market where you see once the price gets to that area, it's either resisted or it's supported, and then you mark it out. Make sure that the trend, it's moving sideways. Consolidations, look for consolidation patterns in the market. Do a lot of back testing. Rewatch this video again until you get some more understanding in how to actually set up your support and resistance.